Hello, everyone. My name is Andrew Seging from Seging Financial. I am the founder of a bookkeeping and tax firm located in Cornwall, Ontario. It is, I think, 11 o'clock on Wednesday, May 6th. It's pretty late. Wearing my comfortable sweater. I like working pretty late. It kind of puts me in the zone. And the last few days, I've been getting a lot of questions from the MP office, trying to help out different businesses in the community, non-clients, current clients about the wage subsidy. It's been a huge hot topic the last week and a half because last Monday the applications opened for processing through CRA, and this week they're now actually in the process of pushing them through. So a lot of businesses have now begun that process of actually pushing these applications through CRA. So what I wanted to do was make a quick FAQ, about 20 questions I came up with, from the last few weeks. I've been jotting down to make a quick 10-minute video. So let's get into it. What is the CEWS, right? You hear in terms like CEWS, wage subsidy, it's all the same. It is the Canadian Emergency Wage Subsidy that passed legislation on April 11th, which is called Bill C-14. It is the 75% wage subsidy you've heard about. Am I eligible for the CEWS? Your business must have had a 15% revenue reduction in March 2020 when compared to the prior year or against the average of January and February 2020. So what you do is you look at your March revenue, okay, and you have two options. You either compare it to your prior year, so March 2019, or you compare it against the average of January and February. So you would take your January 2020, your February 2020, you add them together, divided by 2. That's your average. If you had a 15% reduction in revenue in March 2020, that period you're now eligible for the CEWS. What about April and May? These months are required to have a 30% revenue reduction using the same two methods above. So your prior year, so you would look at April 2020 against April 2019, or April 2020 against the average of January and February 2020. Same thing with May. So it's a 30% revenue reduction. Can I switch between each method? No. So if you decide to choose the year over year or the average method, you have to continue with that method for the rest of the program. You cannot be flip-flopping back and forth. So that is one of the criteria and requirements, is that whatever method you choose, you have to stick with it. So it's very important. It's very, very important for you as a business owner or whoever you are to understand that whatever method you choose, that's one you're sticking with. And it's very important to understand the longevity of this program. It could be 2 months, 3 months, 4 months. We don't know. So just keep that in mind. What does baseline remuneration mean? That's an important part of this process. What it is the average weekly eligible remuneration paid to an eligible employee between January 1st, 2020 and March 15th, 2020. You also have to exclude any period of, let's say 11 o'clock at night, exclude any period of 7 or more consecutive days of no remuneration. So if someone worked week 1, week 2, week 3, and not week 4 in January, you would exclude that week 4 as part of your averaging. That week 4 of $0, it's going to hurt your average, and it's going to hurt what you can apply for in regards to the subsidy. Do I use the pay date to calculate the baseline and eligible periods? This is an important topic. It was a hot topic about a week and a half ago in regards to how do you calculate these numbers, right? Typically, CRA and in Canada, you work on a cash basis, on a payday method. If I pay an employee January 1st, 2020, all the wages were earned in December, but I pay in January in 2020, it's going to show in your T4 in 2020, not 2019. But in this case, it's different. You must use the actual days worked in the specific period for your calculations, not the pay date. That's very important for the hourly and irregular employees. So keep that in mind, is that when you're figuring out the baseline and when you're figuring out wages in that specific period, you're not using the pay date. The pay date is important to understand that it is expected for the wages to be paid. You cannot apply for the subsidy until those wages have been paid for. but you're going to use wages earned in that period. So keep that in mind. I heard I can use the cash method for revenue criteria. Is this true? Yes, your business can choose between the accrual basis or cash basis for determination of your revenue. Again, though, whatever method you choose, so cash or accrual, you must stick with it for the remainder of the program. I'll tell you very quickly what the difference is. Cash is if I invoice you March 31st and you pay me April 30th, cash basis, I'm going to show the income and the revenue on April 30th. Accrual basis, if I invoice you March 31st and you pay me April 30th, I don't care when you pay me, I'm going to show my revenue in March. So that's a difference there. And that can matter. So we do have some clients that cash basis has actually helped them to be eligible for the CEWS as opposed to the accrual method. You might be asking, well, why is that? Well, when you're invoicing all your customers, they're having cash flow issues just as much as you are. So if you're having cash flow issues in March and a lot of your customers can't pay you because they're having cash flow issues, well, yeah, you might have done a lot of work in March, but if you're not getting paid for it, well, they're allowing you to use a cash basis to determine whether you meet the criteria or not. So keep that in mind. Can new hires be eligible for the CEWS? Yes, as long as you meet the eligibility criteria. New hire wages are eligible through the CEWS. So if you bring somebody on who's a new employee in your organization, those wages can be eligible for the CEWS as long as they meet the criteria. Can shareholders and family members be eligible for the CEWS? Yes, they can be. This is what's called a non-arm's length employee, as long as there was payroll paid between January 1st and March 15th. So you need to have established a baseline. If you don't have a baseline, they're not eligible. And there's another part about this I'll expand on, give you an idea what that looks like. So this is the difference between an arm's length and a non-arm's length. An arm's length employee is somebody I hire who's not related to me in any way, shape, or form. A non-arm's length would be someone like a brother, a sister, a family member, a spouse, right? These are non-arm's length employees. Will new businesses that open up on March 1st be eligible? Unfortunately, no. And the reason is because you are in the pre-revenue stages in regards to the application process, and you have no benchmark, right? So you don't have a year-over-year benchmark, and you don't have January and February revenue because you don't have those revenue sources. You have no benchmark, and you can't be eligible. So let's say you only had a 14% revenue reduction and not a 15%. Can you still apply? No. The federal government is very strict on the requirements. Applying and receiving the CEWS would be considered fraudulent in this case. It is very, very important to understand that you must have hit a 15% revenue reduction in March, then 30 and 30. Okay. Without that, you're essentially applying fraudulently. And there is an attestation when you're going through the CEWS website, you are attesting that yes, you have had to hit the revenue reduction, and yes, these wages are eligible. There are some pretty significant fines. Minimally is 25% of a fine of what you've been paid. So if you get a $40,000 wage subsidy over the course of 3 months and it's all ineligible, you're talking about a $10,000 penalty, plus paying all that money back on top of that. So you're talking about $50,000. Do you think you're gonna have $50,000 end of the year? Probably not. So don't do it. As a sole proprietor, is my income considered to be wages? No, your income is not considered to be eligible remuneration. It's not wages. So as a sole proprietor, you cannot put yourself on payroll. If you're a corporation, it's different. It's one of the sort of advantages in this case of being a corporation as opposed to a sole proprietorship. But if you're a sole proprietorship and you draw money every week, it's not payroll. It's not eligible remuneration. Yes, it's income, but for the basis of the CEWS, it's not eligible. Will the CEWS be taxable? Yes. All amounts received will be considered taxable income. And that's okay because you're going to have expenses to offset it, right? If you're receiving $40,000 of CEWS, well, you had paid at least $40,000 of expenses. So you're coming out ahead at the end of the day. You're not going to be paying taxes on a crazy amount of money. You're coming out ahead. So I would recommend to think about, make sure you apply no matter what, and don't think about not applying because it's going to be taxable. It's not a thought you should be having. All right, let's keep going. Does my decline in revenue have to be related to COVID-19? This is a question I got a lot. One few clients that they had a big contract coming into fruition and it didn't happen. It wasn't COVID-19 related. It happened naturally. So no, it doesn't have to be related to COVID-19. And so if you had a revenue reduction just because your business is in that sort of restructure mode, or it's just, business was quiet that month because non-COVID-19 related reasons, it doesn't make you ineligible for the CEWS. So it does not need to be related to COVID-19. How does this interact with the 10% temporary wage subsidy? You can't, if you're eligible for both, you have to reduce your CEWS application by what you received on the temporary wage subsidy. Something to keep in mind is that if you have not been taking advantage of the temporary wage subsidy, they're going to assume, and you have to assume that you will take advantage of it. So they're going to ask you to reduce it by 10% regardless, right? So if you were supposed to get $1,000 temporary wage subsidy, the 10%, you never did because you're like, oh, I'll do part of the 75%. I don't want to take advantage of it right now. When you apply, they're going to assume, and you need to be assuming that you will be taking advantage of it. So you have to include that 10% variance in regards to the wage subsidy to reduce your CEWS application. If I hired my child in April 2020, can I claim their wages through the CEWS? So I talked about just a while ago about this specific issue. So no, because they had no baseline remuneration and they're a non-arm's length employee, they would not be eligible. If you hired a new staff member, it's not your child, it is an arm's length employee, their wages would be, but because they are a non-arm's length employee, they have a different criteria. In this case, they would not be eligible. Can I retroactively rehire my staff for March 15th? That's a huge another hot topic. Depending on your situation, yes, and it can be very beneficial for all parties. When I say all parties, I mean all three. I mean the government, the employer, and the employee. I didn't put it down here, but let me give you an example. If the employee was receiving $1,000 a week pre-COVID-19, now they're on the CERB, the $500 a week benefit. Well, you can bring them back as of March 15th and pay them at least $750, 75%, and you're going to get covered for all that. So that the benefit of now, instead of getting $500 a week, they're getting $750 a week. That's a 50% increase week over week than they were getting on the CERB. So consider that. Depending on what you were paying your employees pre-COVID-19, consider thinking about, maybe I should rehire my staff. Have that discussion with them. Have the discussion with your accountant and see if it's worth it for all parties. Because the government also wants you to do this, right? The government wants you to rehire your staff so that at the end of the day, when the economy is up and running again, which, after today's announcements, this is going to be happening pretty soon. They want the economy to be up and running as fast as possible. Can I get a reimbursement of the CPP and EI for my staff? So, retroactively hiring your staff from March 15th, what about CPP and EI? Yes, you actually can receive 100% reimbursement only if those staff members did not work. So if you rehired your staff from March 15th, so today's May 6th, you hired them back for 6-7 weeks of pay. Those 6-7 weeks of pay, you would deduct CPP and EI quarterly like you normally would, but the employer portion that you would normally top up, 1 to 1 for CPP and 1 to 1.4 for EI, that would be 100% reimbursable. And there's no maximum. It doesn't affect your maximum $847 per week in regards to the CEWS application. So you can theoretically get $847 a week through a wage subsidy for one employee, plus all their CPP and EI on their original wages. So keep that in mind. If I'm eligible for March's CEWS, am I eligible for April automatically? Yes, this is a big topic, and a lot of people are forgetting about this, so I really want to make sure this is stuck in your head. The CEWS will automatically make you eligible for the next following period based on the deemed period criteria for this specific reason. So if you hit March's revenue, 15% revenue reduction, you are automatically eligible for April. If you hit April's criteria of 30%, you're automatically eligible for May. So if you get March, you get April. That's automatic. If you get April, you're automatically get May. So that's really important to understand, because you're essentially, if you get a 15% revenue reduction in March, you're getting 8 weeks. You're getting 8 weeks of wage subsidy eligibility right then and there. And if you didn't have a revenue reduction in April, so let's say things were starting to get okay, you're doing curbside pickup, you're doing deliveries, you're doing whatever else to keep pushing through, and you had a 20% reduction in revenue. Okay, no problem. You still get your March 15th to, I believe it'll be, May 9th. So you're getting your 8 weeks there. So you didn't get your April, no problem. So to be eligible for May, you would have to hit a 30% reduction in May. So you're getting 2 chances for May, essentially. If you miss your April, you try for May. If you get your April, you automatically got May. So keep that in mind. It's very, very important to understand, is that when you are eligible for March, you automatically get April. If you do get April's criteria, you get May's. Please, please, please understand that, because it's very, very important. What happens if my staff were already receiving the CERB and I hire them back? So talking about retroactively bringing them back, right? Let's say you decide to retroactively bring them back, you put them to the CEWS program, but they were receiving the $500 a week or $2,000 a month CERB program. Depending on the situation, they might have to repay it back. So when I say depending on the situation, as in, it's what kind of salary and wages were you paying them through the CEWS program? Because if they are receiving more than $1,000 a month, they would have to give that CERB payment back. I would have them, again, have a discussion with them, right? It's have an open dialogue with them. But it could be beneficial to rehire them back, even though they were getting the CERB, because if you are paying them more than $500 a week, that's just more money in their pocket. So you could be essentially helping them out. Can I use an average weekly method if we are a biweekly payroll? So what I mean by that is, when you determine your wages per week in the period, can you just use an average? So week 1, week 2 is biweekly. Can you just say, $500 week 1, $0 week 2, it's $250? No. Very important to understand this as well. I'm saying that a lot, I'm sorry, but it's very important to understand a lot of these questions, is that you must use actual days worked per period to determine your CEWS criteria. So how much you can get getting back to the wage subsidy. You cannot use a weekly average. Let me give you an example. And this example will make it super clear. If an employee is biweekly and they worked week 1, they didn't work week 2. They made $1,000 in week 1, $0 in week 2. If you put them as an average, right? If you put as $500 and $500, you're essentially potentially paying them. You might be getting a wage subsidy back for $500 and $500, because it's depending on their baseline. So it's not just 75%. There's a lot of calculations involved, but you could theoretically be getting $500 and $500 as a wage subsidy, so $1,000. But if you did it the correct way, which was week 1 $1,000, week 2 $0, you would only be getting potentially $750, right? 75% of $1,000. So it's really important to understand that, and because what happens is this whole problem, this whole example is based on a few factors, based on their baseline remuneration, and it's based on what their actual remuneration was. So do not use an average. It's easy, I understand that, but it's not what you're supposed to do. You're supposed to figure out on their timesheet, they work 40 hours in week 1, 20 hours week 2. You need to put that down. 40 hours times their hourly rate times vacation, 20 hours times their hourly rate times vacation. You have to do that. If not, you're essentially fudging the numbers, and it could bite you in the butt. Are there any special reporting requirements on the T4s? This is another big one, and it's going to take a lot of it's the administrative work on our end. For instance, for our clients, it's going to be absurd, but it's what we do. Employers will be expected to report the eligible remuneration paid to each employee using 3 new codes in the other information area. When you do taxable benefits like box 40 or box 85 for employee paid private medical, they're going to have 3 new codes under the other information, and they're going to ask the people running payroll to stipulate that under the T4. Why? You're probably asking why they do that. It's to make the auditing process a lot easier. Think about this. If CRA knows that you cannot be making more than $1,000 in a period, and they see you being part of the CEWS program and you made $2,000 in period two, well, guess what? They know right then and there they're going to need to claw back $2,000 for the CERB. It's going to be super easy for them to audit this. They're essentially foolproofing themselves for the future, that making the auditing process a lot easier. Because all I'm going to do is look at the T4s. It's going to be a quick double check. Did you receive the CERB? If yes, look at the T4s. Did you receive money in a specific period that would make you ineligible for the CERB? If yes, boom. They don't have to, like, they might do a quick verification check, but that process is going to be super seamless on their end. So there's a lot of work for payroll providers, accountants, or bookkeepers on our end to ensure this is being done correctly, and we must do it correctly. And at the end of the day, it's going to be huge. Like, I'm actually a bit concerned on the amount of people who have been receiving the CERB when they shouldn't have been, or if they have received it and getting reemployed, they're not considering the ramifications of having to pay that money back. Because what's happening is they're going to get all this extra money back from their employer because they're being retroactively hired. It's like, oh, great, that's $6,000. I love it. I'm so happy. But what they don't realize that $4,000 of that they have to pay back. And if they spend that $6,000 they received and it's tax season, do you think they're going to have $4,000 sitting around to pay back? No, they've spent it. That's very concerning for me. And you know, I can't reiterate that enough. I cannot. Is that do not try to get away with if you are getting paid, if you're getting a salary, if you're working, and you're not eligible for the CERB and you're receiving the payment. Listen, that's okay. Things happen, but give that money back, put it away, so you do give it back at the end of the year, because they will get that. They will get their money back. It's a CRA. They know what they're doing here. A few more questions and we're done, I promise. Will the CEWS be applied against outstanding debt? No. So if you are owing HST debt, corporate tax debt, income tax debt, payroll debt, they won't apply it against outstanding debt. However, the legislation does give them some flexibility in regards to how they administer the CEWS and making it fair, making it reasonable. They can use their discretion. At the end of the day, you're going to get the CEWS. I'd be very surprised, and it'd be very rare for those businesses to get that CEWS applied against the outstanding debt, but they do have that opportunity to do so. These are questions I'm repeating. So there you go. That's it. To be honest, it's late. I do apologize. And listen, if you have any questions, I went through as much as I could. There's probably another 10, 15 questions I could have put down that would have been more than likely repeated in a sense, just, different, sort of a slight adjustment on the questions. I'm happy to help as best I can. We are applying on behalf of our clients to make that process easier for them. And it's just what we do. We care for our clients. We care for our community, right? I'm not doing this to get more clients. I'm doing this as much as possible to help our community. Yes, if you'd like to be a client of ours, please reach out. We are taking on new clients. However, that is not my intention. My intention is to help Cornwall, the area, Aquasauce, SDNG, because listen, we had strong momentum before COVID-19. We were working together as a community, and when this hit, it did hit a lot of small businesses pretty hard, and I'm just doing my part. So if you have any questions, you can check out our website, segmentfinancial.ca, or you can email me, andrew@segmentfinancial.ca. My business line, I didn't put it down, but it's 343-885-1284. Again, 343-885-1284. Hopefully this helped you out, and maybe one or more questions really helped you get a better understanding of the CEWS program. Thank you. Good luck. Stay safe. Bye.